Welcome, everyone. This is Araceli with Build Wealth with Araceli. I'm a real estate investing coach, helping some of my Canadian friends going and starting a business in the US buying properties. And today I am interviewing Adam Rahrer. And I really have to ask him how to pronounce his last name because it's rare. So thank you and welcome for being here, Adam. How are you doing today?
I'm doing great. Yeah, thanks for having me on. Really appreciate it. I've always appreciated your podcast and wonderful opportunity to be on here with you today and share some of my experience of California markets, Midwest markets, and just U.S. real estate investing in general. So excited to be here.
Awesome. First, well, tell our audience who you are. What do you do right now in real estate investing?
Yeah, so just kind of background about myself. Started investing in real estate in 2017. I bought a single family house in Omaha, Nebraska for $63,000, which was pretty incredible. I was living in California, San Francisco area at the time. And that was maybe 1/10 the price of like a single family home, if not more than that. So 3-bedroom house, ended up buying it from kind of an interesting story. Ended up buying it from what is now my business partner. But at that point we were just acquaintances, had got connected through a very close friend, and he was flipping houses and putting them turnkey, would put a project manager or a property manager in place and then kind of sell off the whole package to out-of-state investors like myself. And so ended up buying that, got a mortgage on it, so only had to put $15K down, and loved it. Ended up cash flowing, and other than a few hiccups at the beginning, it was a good property. Ended up selling it last year for $140K. So over a 5-6 year period, it was pretty significant. So, and then 2 years later, I was interested to jump into multifamily, and I had stayed connected with Mark, who sold me that house, and he was interested to jump into multifamily. He was doing just single family at the time, had over 100 single family properties and wanted to scale up. And so over the course of 2019, we ended up buying 4 apartment complexes for 64 doors, just kind of consistently, acquiring, and then took a step back in 2020. COVID was a big catalyst there. But just kind of focused on operations. And then 2021 ended up launching our real estate investment fund, Cherrypick Capital, on the premise of looking to scale, looking to grow, and wanted to just dive in. We were raising some money at the time, but this allowed us to be more structured and allow us to have a bigger investor pool and go buy bigger assets. So then we went out and bought a 48-unit apartment complex. We bought a self-storage facility, and it's just continued to grow from there. So,
oh my God, you have given us like a huge story. I kind of want to break it down a little bit.
Sure, yeah, bring it on.
You gave us so much, and very, very relatable to my type of market, because you said something very interesting, that you were from California, you bought in Omaha, and the difference in price is like so high. And the same happens here, at least in the Toronto area where I am. The house prices are really extremely high. So when people are looking to get into real estate investing, they're looking for a place to go. And that's kind of where I bridge the gap, because I have been investing in the US for over 10 years in the Cleveland area that has very similar prices that the Omaha. And that is super important for people to understand, that you have to go to where it makes sense. Now, I really am curious, like, what did you do before real estate investing, and why did you selected real estate?
Yeah, to just kind of pull a little bit on what you were saying, as far as like go where the money is, the cash flow is. Yeah, you're right. It's a very similar situation as far as like if I was to invest in California at that time, or just even now for long-term rental, I'm not cash flowing. I'm not covering my mortgage, my expenses, everything else. So it ends up being a detriment. Whereas in Omaha, I'm covering all of those things. I'm paying down my mortgage, and on top of that, I'm ending up with cash flow. So
Yeah.
when you have that kind of continue to multiply and build on itself, it really has a snowball effect. So yeah, it is very identical. And also, historically, the beauty of California or some of the higher markets was, oh, you have the acceleration or appreciation, which sounded so great. But the story I just told you, like bought a house for 63K, sold it for 140 in a 5-year period. I mean, that's over 100% gain.
Absolutely.
So
And this is what you have to look at is the ROI. So the return on
exactly,
investment with the money that you put in, and especially, the average person doesn't have millions and millions of dollars to put into a property. Plus, the
yeah,
second thing that I always advise people is if you are going to buy a property, let the property pay for itself. Because if you have to ditch out money out of your pocket, then you're never going to be able to leave your 9 to 5 job because you're trying to feed it and you're waiting for it to appreciate, which it might be okay. That's a great bonus. But
yeah,
in the short term, it doesn't really help anybody because that's what you want. You want to free up your time. So that goes
yeah.
back to that. So what made you decide to go into real estate? Why did you buy the property? Of course, the high prices in California, but why did you select the real estate instead of something else?
Yeah, absolutely. I love real estate. It's where all my investments are. I'm completely out of the stock market. I'm completely out of everything else other than real estate. And really the rationale is cash flow. I can be accruing cash flow during this process. It can be paying down my mortgage. There's massive tax benefits within real estate that you don't see in other investments. I mean, just comparing stocks, for instance, like the only value that you see of a stock is when you sell a stock. It might go up, but it's a paper. And usually, unless you're getting a dividend, it's a dividend stock. Like you're not getting anything from that stock until you sell it. At that time, you get money, but now you pay taxes on it. Uh,
And
if you
also,
think about
yeah, if
go
you're
ahead.
lucky enough to sell it at a high price, because
Right.
sometimes it's
Yeah.
just so hard to time it,
It's like
right?
this, right? Yeah, absolutely. So, you're kind of waiting the market. I mean, especially if you think about if you had placed money into the stock market within the last 2 years, it's dropped. It's substantially, gone down. And so if you compare that to real estate, you end up with cash flow during that time period. You end up with tax benefits during that time period where you have depreciation. You can do things like cost segregation to accelerate your depreciation. And then on top of that, you have the sale at the end that you can then benefit from that gain, and then you could even defer those taxes with 1031. So just there's a ton more options. And then the last one that I love personally is that I can control it. I get to touch, feel. It's a real physical asset. If I go invest in Apple stock, for instance, I have no clue what Tim Cook's going to do. I don't know what his decisions are going to be. Like his team or everybody underneath it or where they spend their money. You can look at the financial report, but not on a day-to-day basis and really drive home your own ROI. So for those are some of the reasons that I really love real estate. And then you had asked me, kind of going back to your question before, though, you had asked me what else I do or what else I kind of focus on, right? Yeah. So I've really worn two hats and two careers as I've built out my real estate portfolio. I've led global organizations within sales for custom automation machines. So we build big machines, robot, pick and place, that sort of thing globally. And I run global sales for a company I'm with today, but also I've done that in the past as well. So it's been an interesting journey and a fun journey to be able to build both businesses and kind of wear two hats and live multiple different lives, I guess, in that regard. But I do love real estate and always keep coming back to it.
Yeah, so this is very important as well because some of the audience, because they don't know where to start, right? But
Sure.
one thing that you mentioned is that you had a job in sales. And I think sales is the greatest thing. In my previous life, I'm an engineer, so I work in aerospace and I didn't really have the skills of a salesperson. And it does take quite a bit because it's a different profession completely
It is.
altogether.
Yeah.
But if you have that skill, oh my God, this is like you started here, right? Already, because I think sales is so transferable to every industry. And real estate is not only doing the sales and the transactions, but relating to people and talking to people and creating that network that is going to help you. Like you said, you partner with somebody because you did a real estate transaction. And I'm sure that because of the way that you were with that person and the way you related to him, that you decided to become partners. So that is kind of like the power, not only doing transactions, but having the network that is doing the same thing that you're doing. So that is what is so, so important. So,
Absolutely. Yeah. I went to school for engineering, got my master's mechanical engineering, came out as an engineer as well, and then
yeah.
went to the dark side of sales.
Oh, yeah, exactly. That's what we call it, right? So no,
Yeah.
I was basically in just the technical side for very many, many years. And
Uh-huh.
I didn't get into sales until I got and started my own business. So yeah, it's a tough transition, I tell you. So I'm glad that you did
Absolutely.
the transition before you left your job, because it's really tough to do that.
For sure.
So tell me more about when you started your company, Cherrypick Capital. So
Yep.
what does it do, and how is it possible that somebody can jump in and benefit from what you're doing?
Yeah. So there's kind of a few different pieces to that question. Really the first one is why we jumped in, why we got started. And rationale there was we had a lot of friends, family, coming to us saying, "Hey, it's really interesting what you guys are doing. I love the returns that you guys are showing, that you guys are able to achieve for yourself. How do I get involved?"
Mm-hmm.
And so we really needed a more formal mechanism to be able to allow for investment from friends, family, and now it's really been an extension from friends, family from there. And for us personally, it was a way for us to continue to grow and scale and go buy bigger assets. The economies of scale get much more attractive as you continue to go bigger. If you get a 10% gain on a $10 million property, all of a sudden we just gained $1 million in comparison to, say, on $100,000 property, we just did 10,000. So, it's economies of scale that was really attractive to us, and we love that approach of a real estate fund. So that's kind of the background of it, and then we're going to continue to build more funds. So we actually just closed off our first fund for investment, and now we're going to go into fund number two and go bigger with this one as well. So we're excited about that.
Well, then it's amazing, because you know what, as a real estate investor, one of the things that we go through is raising capital, because it doesn't
Yeah.
matter how much money you have. Eventually, you're going to run out of money, and there are so many properties out there. One thing that a lot of people comment on is like, isn't that like the market dead? If a lot of people try to get into real estate investing, what
Mm-hmm.
would you say to somebody that says that, there's no room for growth, or there's too many flippers, or there's too many people invested in multifamily? What would you say to them?
Yeah, I think there's always deals and always opportunities. I think that over the last 2 years, I guess now, in our interest rate environment, creative financing is becoming more prevalent. Like, just being able to try to find either subject to, which would be essentially like a loan takeover of an existing mortgage, or seller financing in some form or fashion, is stuff that we go after today, which always makes it really attractive in comparison to taking on like an 8% mortgage. We might
Yep.
be sitting on what they might have, which might be a 3 or 4% mortgage, which completely changes the economics, obviously.
Mm-hmm.
Uh, so I think there's always deals out there. I think that in this environment today, we're going to see more. It just feels like people are kind of hanging on by a thread at certain areas of, they could handle the excess debt. They didn't analyze it or didn't necessarily underwrite it to jump from a 3 or 4% debt up to 8 when their loan is all of a sudden ballooning or due. And so either they're going to take a hit or they're going to fire sale or something along those lines. So not that we're shooting or hoping for a drastic event, but it feels like there could be more people popping up in a tougher situation, and we'll capitalize on that. And I think others will be able to as well.
Absolutely. So the way that I look at things, that there's always going to be deals. However, you're going to have to be very skilled at finding those deals
For
and being
sure.
a little bit creative. That is the only difference, because the market, like any market, is cyclical. So it goes up and down. You're going to have your buyer's market, your seller's market, and you're going to continue. So the most important thing here is to continue to grow, to understand your market, how to identify the deal, and how to find it, negotiate, all of those skills that are so important for real estate investors to have, and that you cannot just acquire in one day. You have to continue to do deals in order for you to, be good at it and navigate through it. But if you are able to go through it at this time right now, which is it's an interesting time, like you said, because we're looking at different interest rates. There's a lot of people not selling because they're waiting. So there's so many factors, but the thing is, the market is always moving, no matter what way, but it is always moving. And that moving is what creates those deals that us real estate investors can take over and make some money. Do you agree on that?
Absolutely. I do, yeah. And just to kind of add to that, you're talking about all the different skill sets, all the different pieces of the puzzle that you really have to build out. And that's where somebody like a syndication like Cherrypick Capital is a great avenue for a lot of investors. If they're, just beginning, don't know where to start, investing in a syndication is really a wonderful path, because that's stuff that we do day in, day out. And that is our job, right? That is how we get compensated, but we also provide, potentially a better return than them going out and doing it on themselves. And
And
I think it's a great avenue.
It's a great avenue, especially for people that they're not eager to go out there and find a property and grab a hammer and go at it, right?
Yeah.
Some people, they just don't have the skills, they don't want to do it, or simply don't have the time to do it. So I think that's why I always like to present a different avenue, because there is always a way to get into real estate investing. You don't have to go out there and buy a rental or do a flip. You don't have to do that. There's many avenues. And the most important thing is it has to resonate with your personality, what your long-term goals are, what you want to do. And of course, you want to grow your capital. I think we all do. And to create some generational wealth for your family, and also so you're able to enjoy it today, not just
Exactly.
for the long term. So
Yeah.
I think real estate is always can give you those benefits today and for the long term as well.
Yeah, exactly. Got to find the right deals and the right partners and the right people. And you're right. If somebody wants to really kind of sink their teeth in and go buy a bunch of properties, that's awesome. I know that you are great at helping those people do it. I'm always a resource and happy to provide, my guidance, anything that I can. But there's a lot of people that just want to continue to focus on their existing career, their family, things like that, and want the passive real estate side, which is the syndication space, the fund management space where we are.
Absolutely. So tell me, Adam, if people want to find out more about you, how do they contact you?
Yeah, we're pretty out there on social media, but you can also go to our website, cherrypickcapital.com. And if you want to get in contact with us, just hit the Get Started page, and that will send us a message and we'll reach out. And then my social media is Adam Rahrer Real Estate. So there's Adam_Rahrer_real estate. So
Perfect. And we're going to have everything down in the comments. So
great.
if you don't know how to spell it, everything will be there for you to link to you, Adam. I really do appreciate very much for you sharing your story. I think this is very important for people to learn that there is not only one path to real estate investing. You can do it many ways, but the most important thing is it has to resonate with you, and you have to continue to find the right partner to do it with. That is the most
Absolutely.
important thing. Is there any other comments, final comments that you have for the audience?
No, nothing else. I appreciate your time and interviewing me today. It's been great to get to know you, and look forward to talking to you soon.
Awesome. Well, thank you very much for being here. And hopefully we will see you sometime in the future so you can give us more of those little nuggets that we can use.
Awesome. Sounds great.
Thank you so much. I really appreciate you being here. We'll see you
Have a
next
good
time.
one. Bye-bye.
Bye.